evening, all. Ira Epstein with your metal market update. And this update is for the evening of Wednesday, the 24th of January, 2024. And we're sitting here now at just getting on to 6 p.m. Central Time. In the metal markets, you're looking at them waffling. Silver's come back and gaining on gold for a change. Copper had a phenomenal day to the upside. Why? Well, China decided to pull out all the stops. And what they decided to do is they had told us that they were telling their version of their stock regulatory agency to go in and starting, I believe it's February, they're going to start buying stock. It wasn't enough. The market wasn't buying it. And by the way, I call that window dressing. For me, when they do that, it's probably a good time normally, if it doesn't accompany other things, to go short those that rally pretty hard, because all they've done is they've artificially put money in. That money runs out. Did the company really change? That's part of the problem. But what they did is today, out of left field, they did something unusual. They had the head of the central bank, the PBOC, come up, Mr. Pan, and what he said was they are cutting the bank reserve ratio again, about 0.5 percentage point. Well, that's going to put in quite a few bucks into the economy. And when that takes place, and that's going to be right around the corner now, that'll free up money to be lent out. And the idea there is it'll get the economy going. So finally, President Xi is realizing he screwed up. It's really that simple, all right? All this driving out Western money, all this we're going to turn inward looking at ourselves and our people will buy. They're not buying diddly when their home values are falling apart and the stock market's falling apart. If anything, they're scared. And finally, the Chinese government's reacting to it. We'll see how that does. But it impacts us because the first thing that happens is iron ore prices take off, copper takes off, because you're assuming it's going to have legs to it and the market might go. I don't know if it will or won't, but that's what went on. The other market that goes up on that news is if the economy's coming alive, so should the energy markets, because that's been an element that's missing. They had been buying. They and India have bought a lot of the Russian oil, as we know, that's hit the market. But now the things are question marks as to what happens. Tomorrow's a day full of action. Let me explain this and take you right here. You start off with the European Central Bank monetary policy statement, and then Ms. Lagarde will hold her press conference. Jobless claims at 7:30. Then we get the first look at the fourth quarter 2023 advanced GDP. Then we're going to get durable goods coming out at 7:30. The Chicago Federal Reserve National Activity Index comes out at 7:30, and new home sales at 9 o'clock. So if you think you don't have an awful lot of information tomorrow, you are sadly mistaken. Now, one more thing that I'm going to be mentioning in each of my interviews. I'm watching what the stock market does in the unabated rally. The advantage of gray hair, the advantage of having owned a stock firm, not a branch office. I owned a stock firm. And having been a commodity broker as long as I have, since the 1969, I've seen a lot. And I do have my wits about me, and I don't take, Pedrazin or whatever those things are for the brain help. I probably need it, but I'm not doing that yet. My son will probably say I need it. But where are we? This reminds me of the 90s, the tech bubble. I can't explain it. Everything to do with tech. If you've got a tech company, let's give it a crazy multiple. It's going to go. AI is going to change everything. The world's going to change, and it's all going to happen now. Just want to remind you of something. We heard the same thing with electric vehicles just recently. Stellantis CEO came out today, and I admire what the man said. He said, we're building a platform on a car, and on that platform, we can put an electric engine in it. We can put a hybrid. We can put an internal combustion. We're building one platform to do it. But the public doesn't want to buy cars in America that are about 30 to 40% more expensive than a traditional combustion engine, same car with it. Yes, the government help is there if they're going to subsidize a certain amount, but that's starting to wane. Points to remember. That's all I'm saying to you. I just look at this rally, and I am not a top picker. I am bullish as can be, right with you. Go back and look what happened during the big bubble. This thing's starting to feed on itself, and I just start to wonder. That's all. Again, age helps a little bit. All right. When we look at the gold market, as I said, it seems that we're on a way of a correction. And the market, the correction that's happening, you might be going back to wherever this 18-week average meets price. Right now, it's 1992.60. It sounded so far away when you were up here over 2070, 2060 before. You're not there anymore. Now you seem to be making your way towards it. Nothing on this chart yet is bullish. If anything, it's keeping its bearishness. Lower highs, lower lows. You're coming into the first support that you and I have been talking about here night after night. I said, if it's going to stay down, then the 200-day average, which we hit once, we bounced, challenged the 18-day average, we're coming to it. And when you add to that the Bollinger Band, if that gives ground, you could easily get now to the 1996, 1998 level, where I'd look for the major support to show itself. So around the $2,000 level, I'm not saying it's a buy there. I'm saying that's where I think the pros between the 200-day average of 2011 down to that, they will cover their shorts and you're oversold. You're not even trying to lock in an embedded reading to say prices are going to accelerate to the downside. They could, but it's not looking that way. I see more of a sideways market than I do anything right here. Gold-silver ratio, you know where you're going on the first correction. Back to the 18-day average of closes, 88.28. And you're at 88.51 right now, and that means that you've taken the market to its extreme. We got up very close to this past high, and the market's coming back in. It doesn't mean silver's ready to run on the market. Why did silver gain? Again, silver's an industrial metal. I know that you diehard silver people will tell me until I'm dead it's a precious metal. It's not a precious metal. Precious metals aren't $20 an ounce. Precious metals are $1,000, $500, $2,000. This is not a precious metal. This is an industrial metal, a phenomenal one, used in all kinds of electronics. And some people like to hoard it because it's the poor man's hoard. But why not go for copper then? All right. In the silver market, you came back up to the 18-day average of closes. You lost the bearish embedded reading. Why don't we step right here? This is today. Day before, you didn't lose it. What made the market go bananas today? I gave you the answer. China pulled the plug. China said, hold on, baby, we got to do something. And that something is that they changed their bank reserve ratio. I don't know one economist that thought this was happening. And I read like a madman. I didn't see one person calling for this. They were all saying, wow, this is a terrible story going on there. Well, this is the first important thing that's done. It's the third bank cut that China's done, the reserve ratio cut, in a 12-month period. So that's a lot. In the copper market, you see what happened. The copper coming in prior to this had gone to the resistance point. Now it's already overbought coming up here. This is a big resistance area, but to get back under these numbers, something terrible has to happen. So you've had a bad reaction down. You've taken the market down to a point that if China can get its economy going, the odds of revisiting those numbers aren't very strong. When we look at the platinum market, it died on the vine. It didn't participate with all this. It's back to the 908 level. It did lose, and this is important. It lost its embedded reading today, 23 reading. The only time it can get it back is the next day. It's a daily chart, so it's the next day. It's not trying to do it. In fact, it just opened, and it's still staying lost. If it re-embeds by the close, you open the door up for the 865 level. If it loses it, then we open the door to come up here, 929, the 100-day average up to the 18-day average at 936. So this was a market that I don't mind telling you, I had told traders to sell the other day, and I had them covered last night. I had a straight stop in the market, and I was thrilled that they had done okay, in fact, on the trade, and we'll see what happens. They don't all work that way, but I got nervous in the market, very nervous. Kept reading things that weren't right. Now I know what it was. It was about China. Somebody knew something. In the dollar index, we're on the verge of flirting. The word is flirting with losing the embedded reading. Why? Any reading under 79 is a loss of the embedded reading. When that occurs, you often go to the closest main moving average. Well, in the particular case here, believe it or not, it's the 200-day. Even though you hit it, that would be what it is. Maybe a slip to the 18. I am just on the last chapter in my new charting course on stochastics, the very last chapter. Then I've got maybe another subject or two in a wrap-up. So again, my goal was to finish this month, to finish the course. I'm going to be right about there, and then we'll be releasing it in February. So for those of you that want to learn these techniques, you've got some time. It's a lot of chapters, probably 45, 50 chapters of videos, complete with charting and everything. It's coming out, and I've really done the best I can with it, and I think it's going to be pretty cool for you. But I'm not through yet, okay? You can always run into a problem or two at the end. So I'm watching that, and I am concerned. If the market opens tonight steady to lower, you probably lose that reading, but it makes sense to lose it. Why? Because you're going right now into the European Central Bank meeting. We don't know what she's going to say, but my guess is it's sitting tight and she'll do just what she's been saying, Ms. Lagarde, which is we're data dependent. We need to see the data to tell us what to do. There will be discussions on when to roll down. I'm assuming that they're talking about that already, and we'll see if she answers those questions in the morning. Remember, they come out with their statement, then there's a press conference. I think it's all around 7:30 a.m. Central Time. Then we have the 31st, our central bank meeting. We have the Bank of England next week. Dollar's had a nice run. It can afford to pull back here, but something important happened. What was it? So before I get off this chart, what do I teach you? I said, we've created some special courses, and one of them deals with outside days. And you get outside days all the time. If you take out the low of an outside day, a certain event happens. Take the course and you'll understand what that event is. Now, I want to remind you about everything that we're doing right here. Some of you like to use what I've got. And for a lot of you, you can't write this yourself, all right? I mean, you got to get into the different charting software you're using and write the parts to it. So we do put together for some of the services, and one of them that we went with was TradingView, the Lynn Trading Platform, QT, and I put in my different indicators there as packages. If you'd like to get it in TradingView, all you need to do is go to our website, the Ira Epstein website, go under Client Resources, sign up for it there. The next business morning, if you do it during the day, we normally pick up on it. But if you do it at night, it'll be in the morning. We turn it on. As soon as you log in, it's right there. It doesn't take up much of your pair space. You know what I'm talking about if you use that. And you get all of this. It takes up 2 slots. So you have plenty of room there. How do you do this? Go to iraepstein.com. As I said, go into the area Client Resources, be in the top right. You'll see it there. It's very clear. We make our website very easy to get around. Or you can click right here. If you're on your PC, it'll take you right to that area. Sign up, and away you go. I'm Ira. You have a great day. I will talk to you first thing in the morning, and it's going to be an exciting day. Take care.